Simon's back now, more on house prices.
Yeah, bouncing around a little bit at the moment. Down last month, looks like they're up a bit this month. According to the Nationwide, house prices were up last month after a weak start to the year that had been blamed on snow and the end of that stamp duty holiday. Now, they were up, the latest report showed they're up 0.7% in March, reversing a 0.8% fall we saw in the previous month. Now, the annual rate that prices are rising remains relatively high at 9%, and of course, the recent announcement on stamp duty for homes under 250,000 should encourage more buyers to hit the market, with an average saving for them, for first-time buyers, of nearly £1,400. Well, Katie Tucker is a mortgage broker from Private Finance. Bouncing around a bit, which way is it going? What's the trend?
Well, we knew it was going to be a bit of an erratic year, really, and we knew they were going to go up and down a little bit. But the point of this recovery, just in 1 month, is it's quite a relief, really. It means that instead of falling into a nasty double-dip recession, it's more likely that that was just, as you say, the impact of bad weather and the stamp duty holiday coming off that had caused the first-time buyers to stay at home.
OK, the stamp duty last measure obviously had an impact. Does that mean that this new measure, that no stamp duty up to 250,000, will have a positive impact, do you think?
Yes, we very much expect so, and it will have an effect up the whole of the spectrum, because this has been very strategically timed, actually, bringing in a stamp duty at the other end of the scale, or rather increasing the stamp duty at the other end.
Where homes of £1 million will go from 4 to 5%.
Yes, of course. You know, if you're buying at £1 million, that means that you're putting up your stamp duty bill by £10,000. A lot of people are quite disgruntled by that, and so people who are at the top of the scale may be thinking, oh, I was going to sell in 2 years' time, maybe I'll bring that forward. So if the first-time buyers have got a stamp duty exclusion now, it could shift up to the second-time buyers, so there's the hunger to sell from above as well. It could get some good movement all the way up the ladder.
So we'll see a big increase in number of actual houses sold.
We're seeing a lot more activity in the estate agents already.
But mortgage finance, that's a big question. Still the lending pretty sluggish out there, but we are beginning to see some higher loan to values, and in fact there was an announcement yesterday the Post Office is going to introduce a 90% mortgage.
Yes, there are several lenders now with 90% mortgages, all just under 6% for a fixed rate, and they're a bit more affordable. We are by no means where we were 2 years ago, because that policy could possibly never come back, where we were lending a bit more accommodating with the lending, shall we say. But there's certainly more appetite to lend now.
So you can get an 85% or 90% mortgage, but are they going to be more scrutiny on what kind of a credit you are?
Not only are they priced for risk now, so your cost will be out a little bit more expensive, but it's about the risk that you are as a borrower. So you might be able to borrow 85%, but the credit scoring is extremely stringent.
OK, so you can get it, but you're just going to have to work a little bit harder and possibly pay a bit more.
Yes.
Katie Tucker, many thanks. Back to you two.
Thank you very much, Simon.
Thanks, Simon.
Thank you.
Now, how do you